All right, so are you ready to jump into Indian fintech?
Always ready for a deep dive, especially when it's a company like Paytm.
Yeah, Paytm, they're the company behind that digital payments platform that's like, I mean, it's everywhere in India, right?
Oh, it's huge.
Yeah.
And, everyone's heard about their IPO and everything that happened with that. But
Yeah, we're not going to rehash all that.
no, we're going deeper.
Yeah, we're going beyond the headlines. We really want to understand, what their recent financial performances work, what that actually tells us about their strategy, the challenges they're facing, what they might have planned for the future.
Yeah, and the thing is, we have a ton of information to use here. We've got their Q3 FY25 earnings release that's going to give us the numbers, the nuts and bolts.
The raw data.
Exactly. And then we have the regulatory filings to see kind of behind the scenes a bit more how they're actually doing things.
Right, the nitty-gritty.
Yes. And to top it all off, we have some of the questions that analysts are putting together for the investor earnings call.
Oh, nice.
Yeah. So it's like we're peeking behind the curtain a little bit.
I love that. So we're not just crunching numbers.
No.
We're really trying to figure out what is Payteam's game plan? What are they doing?
Right. And they're aiming big.
It seems like it.
Huge, massive merchant networks.
Right.
Innovative payment devices. And they're even thinking about going into international markets.
Yeah, that's a big one. So
But-
they're not content with just being like a payments app.
No, they want to be like the platform for finance in India and maybe beyond.
Yeah, it's really ambitious. So our job today is to try to figure out if these big plans are actually turning into financial success, and what does all this mean for the future of mobile payments in a country that's going digital so rapidly?
Definitely a lot to unpack.
A lot to unpack. All right, well, let's start with the basics, their financial performance.
Okay.
They reported a 10% quarter-over-quarter revenue growth, so they hit 1,828 crore.
Wow.
Now, for anyone who doesn't know what a crore is, it's basically 10 million.
Right.
So we're talking serious money here.
Yeah, big numbers.
Big numbers. And the growth is coming from both payments and financial services, which is a good sign, right?
It's a really good sign.
Yeah.
It shows that they're not relying on just one thing for revenue and that their strategy of diversifying is working, especially when you look at the global economy, which has been up and down lately.
Yeah, it's been a little rocky. So diversification, good, but are they actually making money?
Well, that's the big question, isn't it? And the answer is not yet,
Okay.
but they are getting closer. So their EBITDA earnings before interest, taxes, depreciation, and amortization, and that's basically how profitable are they in terms of their operations.
Right.
Improved quite a bit to 21 crore. And their PPAT, their profit after tax,
Yeah.
their bottom line, that also got better at 2.8 crore.
So still in the red,
Yeah,
but moving in the right direction.
exactly. And that's what investors are going to be looking at.
Uh-huh.
Is this going to be sustainable profitability?
Now, I saw that they keep mentioning this DLG program, default loss guarantee.
Yes.
Sounds a little risky, particularly when we look at their contribution margin.
It is a risk, for sure. With DLG, Paytm is saying to lenders, hey, we'll cover you if there are losses on these loans, especially the ones to merchants.
Oh.
So it makes it more appealing for the lenders to work with them, and Paytm can charge higher fees. But of course, if those loans go bad,
Not on the hook.
they're on the hook, exactly.
So they're really banking on being able to assess that risk and manage those loans.
Yes, definitely. And to kind of offset that risk, they're being smart about their spending on equipment and infrastructure, all that stuff. They have this device refurbishment program.
Oh, interesting.
Yeah, so they're not buying new payment devices all the time, and that saves them a lot of money.
So they're trying to be strategic and make smart moves on a lot of different fronts.
That's a game of chess.
Yeah, it really is. All right, well, let's take a closer look at their payments business.
Okay.
Their GMV, gross merchandise value. So that's the total value of all the transactions on their platform.
Right.
Got a massive boost during India's festive season, which makes sense. Everyone's shopping, celebrating.
Yeah, lots of spending.
So they hit 5.0 lakh crore.
Wow.
That's 5 trillion rupees for those who are doing the math at home.
That's incredible.
It's a huge number. So they're really benefiting from how Indian consumers spend, especially during those cultural events.
Definitely.
Right.
But it's not just online transactions, right?
No, it's not. I'm
Yeah.
seeing a lot about their push to get into the offline market as well.
Yeah, they want to be everywhere.
Right.
And you can see that when you look at the numbers for merchant subscriptions for payment devices, they hit 1.17 crore
So all those little Paytm QR codes.
in every shop on the street.
Yeah.
They want to be everywhere. And they're tapping into that market that still uses a lot of cash.
Yeah, which is a huge opportunity.
Huge potential for growth.
But it hasn't all been smooth sailing, right? There was that whole thing with UPI, the Unified Payments
Oh,
Interface.
right, the NPCI.
Yeah, the National Payments Corporation of India.
They temporarily stopped Paytm from getting new users on UPI, which is like the backbone of mobile payments in India.
That's a big deal.
Huge setback. But they got the green light again to start onboarding new users, and they're working hard to get that market share back.
So they're back in the game
They are.
and ready to compete.
They have to be, because UPI is how everyone pays in India. Imagine not being able to use that. It was a big blow, and now they have to convince users to come back to Paytm,
Yeah.
and that's the best choice.
All right, so they're fighting for their share of the payments market, but they're also going big into financial services, calling it their next frontier.
Yes.
And that growth there is pretty
It's
impressive.
huge. They had 34% quarter-over-quarter growth in financial services revenue, and that came to 502 crore. And a lot of that is coming from loans to merchants, which is where that DLG model is playing a big part.
So they're lending money to small businesses and guaranteeing those loans to get lenders on board. Bold strategy.
It is, but it seems to be working at least for revenue.
Right. And they're also seeing a lot of growth in their assets under management for those DLG portfolios.
Yeah, the AUM is increasing rapidly.
Now, when it comes to personal loans, it looks like they're changing things up a bit. They're moving to more of a distribution-only model. So they're not going to handle the actual collecting of repayments on those loans.
Interesting move, right? Yeah.
What do you think's going on there?
It seems like they want to focus on what they're good at, the technology and distribution.
Right.
So they're partnering with lenders who already know how to do collections, and that lets them scale up faster and maybe reduce some of their risk.
But they're not giving up on personal loans completely, are they?
No, no. They're still figuring things out,
Mm.
trying to find the right balance. They're also trying out other financial services like equity broking and insurance.
So they want to offer it all?
They want to be the one-stop shop for everything finance.
Ambitious, for sure.
It is, and it's a crowded market. They've got competition from the big players and the new startups.
Yeah, everyone wants a piece of that fintech pie. And that brings us to their biggest move yet, international expansion.
Right? They said they want to take their Indian model and use it in other markets that have similar demographics and economic conditions, and they want to use their existing technology.
So they're not starting from scratch.
No, and they're being smart about it.
Mm-hmm.
They're looking at partnerships, getting licenses in specific markets,
Yeah.
maybe even making some strategic investments.
Yeah, dipping their toes in the water before they jump in.
Exactly. It's complex, and it's expensive to expand internationally. They need to figure out the risks and opportunities for each market.
But I'm also seeing some people who are skeptical. Can they really do this outside of India?
Yeah, it's a good question. What works in one place doesn't always work in another. They'll have to adjust their platform, how they market things, their operations, really everything,
And all those different regulations?
and different cultures. It's a lot to consider.
It's a big gamble with a lot of unknowns.
Definitely. But that's what makes this whole Paytm story so interesting. It's not just building a business. It's like they're trying to change finance, both in India and maybe even beyond.
All right, well, let's switch gears for a minute and talk about profitability. How are they planning to get there? They've outlined 5 key areas: compliance, merchant innovations, customer acquisition, financial services, and using AI to make things more efficient.
It's a big plan, and they've been really open about their financials. They've even given details on things like their ESOP costs, the stock options for employees, and their cash balance.
Which is good. Transparency is always good.
Yeah, it builds trust with investors.
Yeah.
And it looks like they're making progress. The EBITDA, before ESOP is getting better, their profit after tax is moving in the right direction. And they have a good amount of cash, especially after selling their stake in PayPay, that Japanese payments company.
So the numbers are looking good,
Yeah.
but what about the bigger picture?
Well, that's where things get really interesting.
Okay, so we've got the numbers, we've got the strategy, but what does this actually mean for the average person in India?
That's the important question, isn't it?
Mm-hmm.
And I think we need to step back and look at the bigger picture here. Paytm's success isn't just about what they do. It's about what's happening in India's economy.
Yeah, we're talking about the rise of digital payments, e-commerce, all this digitization of businesses, especially those micro, small, and medium enterprises.
The backbone of the economy.
Yeah, the MSMEs, exactly. These are the small shops, the street vendors, all the local businesses that make up Indian commerce. And Paytm is really betting on them going digital. They're giving these businesses the tools to accept digital payments, manage their money, even get loans.
It's an ecosystem.
Yeah, like a whole digital marketplace for small businesses to really grow and thrive.
Exactly. They're empowering these businesses to be a part of the digital economy, and that's a huge deal.
It is. But what about UPI? The Unified Payments Interface. That's how everyone pays in India these days. Can Paytm really compete with something that's become so essential?
It's a big challenge. UPI is so convenient and fast, everyone accepts it. But Paytm sees it as an opportunity. They're using UPI as one payment option within their system, but they're also focusing on things that go beyond basic payments.
Okay, so they're using UPI, but also trying to stand out by offering more services and features to both businesses and users.
Exactly. Think about it. They're creating different ways to make money. It's not just about transaction fees. They have subscription fees for their payment devices. Those sound boxes that make that little jingle when a payment goes through.
I love those.
They also make money from merchant discount rates on certain transactions and even get incentives from the government for promoting digital payments.
So they're finding different ways to capture value at every step.
Right. But they're also being smart about it. They know that not all merchants are the same, so they're making a bunch of different payment devices, QR code scanners, point-of-sale terminals, all kinds of things to fit what each business needs.
It's like a toolkit for digital payments.
Exactly. And remember, they're not just focused on the big cities. They're going into smaller towns and villages
Yeah.
across India, bringing digital payments to those areas too.
Huge undertaking, but huge potential.
Massive. But they also need people to use Paytm, right? They need those users to make the payments. What are they doing to attract and keep those users?
Good question.
They have to keep innovating, make the app really easy to use, offer rewards and incentives, add new features and services to stay ahead of the competition. And remember that whole issue they had with the UPI restrictions?
Oh, yeah, that was...
Their monthly active users took a hit. But
Which-
now that they can onboard new UPI users, those numbers are going back up.
So they're recovering.
Yes, but they can't slow down.
Yeah.
The competition is really fierce out there.
Yeah, especially with those big global companies like Google Pay, Amazon Pay, WhatsApp Pay coming into India.
It's a whole different game now.
It is. How can they compete with those giants?
It's a real David versus Goliath situation. But Paytm does have some advantages. They really understand the Indian market, they have strong relationships with merchants, and their brand is already well known in India.
So they have the home field advantage.
Yes, but is that enough? They need to use that advantage to innovate faster and really focus on what Indian consumers and businesses need. It's local expertise versus global scale, and it's not clear who will win.
It's a high-stakes game, and the stakes just got higher with their move into financial services.
Right. They're betting big on this.
Yeah, and their numbers look good.
They're doing well, and it makes sense because a lot of people in India still don't have access to traditional banking services. But what's interesting is that Paytm doesn't want to become a bank themselves. They're more like a platform, a connection between borrowers and lenders.
So they're like the matchmakers of finance.
Exactly. They're using their technology and their knowledge of the market to make finance more efficient and accessible. And that DLG model that we talked about is really important here.
Right. They're guaranteeing those loans to lenders so that they'll work with Paytm and make loans available to people who might not qualify otherwise.
It's risky, but it opens up this huge market of borrowers, especially small businesses and people who are new to credit.
But they're not just doing loans, they're also expanding into other financial services like equity broking and insurance.
They want to be the one-stop shop for everything finance.
Right, but can they really do it all? Won't they run into competition from companies that specialize in those areas?
It's a valid point.
Yeah.
They need to find that balance between offering a lot of services and making sure that each service is really good and meets the needs of their customers.
It's a balancing act.
It is. And the decisions they make in the next few months are going to be really important.
Okay, let's go back to their international expansion plans for a minute.
Yeah.
It's a bold move, especially since they're not making a profit in India yet.
It's a gamble. They're hoping they can repeat their success in other emerging markets. But it's risky. Each market is different. Different rules, different competition.
Then different cultures. What works in India might not work somewhere else.
Exactly. They'll have to adapt everything in their platform, how they market themselves, their whole approach.
So they have to prove that their model works outside of India and figure out how to navigate different cultures.
It's a lot to handle, and it'll be interesting to see what they do.
All right, let's talk about the numbers again. Paytm has this roadmap to profitability. They're focusing on compliance, merchant innovations, customer acquisition, financial services, and using AI to make things more efficient.
Right, and they've been very open about their financials. They've even given details on things like their employee stock option costs and their cash balance.
Which is good. It shows they're being transparent with investors.
And their performance lately suggests they're making progress. Their EBITDA, before stock-based compensation, has gotten better. Their profit after tax is moving in the right direction, and their cash balance is healthy, especially after selling their stake in PayPay.
But it's not just about the numbers, is it? There are other things to consider about their strategy. One thing that stood out to me was their focus on compliance. They've had some regulatory problems in the past, and they seem serious about fixing those issues and building trust with regulators.
It's a smart move. In-tech compliance is everything. It's not just about avoiding fines, it's about building a sustainable business that follows the rules.
And it looks like they're really investing in getting new customers, trying to win back those users they lost during that UPI freeze.
They have to. They need to keep growing their user base and keep those users engaged.
And they're using AI for a lot of things, like risk assessment and customer service.
AI is a powerful tool, and they're using it to its full potential. But it's also a bit of a double-edged sword. There are concerns about bias in algorithms. The potential for AI to make unfair or discriminatory decisions.
Right, and that's a bigger issue than just Paytm. It's something we need to think about as AI becomes more common in our lives.
Definitely. We need to make sure AI is developed and used responsibly with safeguards in place.
Now I have one more question about their financial services business. I'm seeing some mixed messages about their approach to personal loans. On one hand, they seem to be moving to this distribution-only model, but they're also talking about getting back into loans where they handle both distribution and collection.
You're right, that's a good point. And it shows how their strategy is constantly changing. They're experimenting, trying to find that sweet spot between risk and reward. It seems like they're being more cautious with personal loans, letting other lenders handle collections to lower their own risk.
But they're still willing to be more involved in certain areas where they see less risk and more potential profit.
Exactly. They're being picky, focusing on specific groups of customers with good credit history.
So it's a complex strategy. They're not giving up on personal loans completely, but they're being more strategic about how they approach that market.
And it'll be interesting to see how this all plays out over the next few quarters.
Okay, I think we've covered a lot here. We've talked about their financial performance, their international plans, their role in India's digital economy, and the big trends affecting fintech.
We've been all over the place.
Yeah, but I think we're starting to understand where Paytm fits in this rapidly changing world.
Definitely. But there's still more to explore.
Oh, yeah, a lot more. And that's what makes this so interesting. Yeah, it really is. And as Paytm keeps growing, are there any downsides to their strategy? Anything we should be watching out for?
That's a really good question. And, one thing that comes up in these reports is competition. As Paytm gets bigger, both in India and if they go international, they could become like the major player.
Right. So that whole thing about monopolies, one company gets so big that it basically crushes competition and there's no innovation.
Exactly. And some experts are already worried about that. They're saying that Paytm growing so fast could mean less choice for consumers and maybe even higher prices in the future.
Yeah, that makes sense. So it's not just about Paytm succeeding, it's about how that success affects the whole market.
Right. And that's why it's important to have good regulations to make sure there's fair competition and that no one company gets too much power.
Now, something else I noticed is how much they're relying on that DLG model, those default loss guarantees, to grow their lending business. Seems risky.
It is risky for sure.
Yeah.
If they get their risk calculations wrong or if the economy takes a downturn, they could lose a lot of money. And that could affect their profits and their ability to keep investing and growing.
So it's high risk, but also high reward.
Exactly.
Makes me wonder, what if it doesn't work out?
That's what investors are going to be watching for sure. If their lending business doesn't do well, it could have a big impact on everything else they're doing.
Okay, so competition and their lending model, anything else?
Well, managing all that growth and complexity is going to be tough. As they move into new markets, new services, they're going to have to make sure the user experience stays smooth, keep costs under control, and deal with all those different regulations.
Yeah, sounds like a lot.
Yeah, it is. Execution is everything. It's not enough to have a good plan. You have to be able to actually do it.
And that comes down to people, processes, and technology.
Exactly.
Talking of technology, what about all the AI they're using? It seems like they're using it for everything from figuring out risk to handling customer service.
AI is a powerful tool, and they're using it in a lot of ways.
Yeah.
But there are also some worries about AI being biased. Those algorithms making decisions that are unfair or discriminate against certain groups.
Right, that's a big concern, not just for Paytm, but for how we use AI in general.
Absolutely. We need to make sure AI is developed and used the right way with protections in place.
So as we wrap up this deep dive, I'm feeling both optimistic and cautious about Paytm. They're a really interesting company with a big vision, and they're definitely shaping the future of finance in India. But they have some big challenges too, and there's no guarantee they'll succeed.
I agree. And that's what makes this whole thing so fascinating.
Hmm.
It shows that even in the world of technology and finance, there are no easy answers. It's all about taking calculated risks, adapting to change, and always pushing the limits.
And for you, the listener, as you think about your own finances, remember diversification is important, not just for companies, but for your own investments too.
Right. Spread the risk.
Exactly. And be aware of the risks involved in any financial decision. Do your research before you make any moves. And remember, the world of finance is always changing. Stay informed, stay curious, and stay engaged.
Good advice.
Well, thanks for joining us on this deep dive into Paytm. I hope you found it helpful and interesting.
It's been great talking about this with you.